Okay, yeah. So we're gonna be talking about trade alerts and option orders. And I thought about making slides for these, but I realized as I had started to make the slides that I was ending up taking a lot of screenshots of just the option chain itself and the platform. So I figured it might just be better to go through it on the actual platform today rather than walking through slides first and then talking about it. So I'm going to pull up Thinkorswim because that's what the majority of the people here use. And we're going to use NET as an example. Now, this is a symbol that we actually talked about in the main room on Friday. Let me move this down a little bit. So I hope some of you guys got into it because I mentioned at the close of that session that NET, FTNT, and I think there might have been one more, but those were the three I liked for continuation higher going into next week and were trades I would have considered putting on. And as you can see, NET, beautiful move to the upside, right? Now, it technically hasn't fired its squeeze. So for those of you who might have been late to the game on this, you may consider jumping in, but I would recommend certainly watching the intraday charts. And if you really feel the need to get in up here, which is, you got to understand slight FOMO at this point, then only get into a portion of your normal capital risk. That way, if it does drop back down and all these signals still look good, but it goes back to retest support, you can then cost average into the trade and build into it overall, right? So let's talk about NET, an example of these two things. First of all, right, it is seeing an excellent move to the upside. For those of us who might already be in the trade, we might want to go ahead and set an alert as a potential area where this price could go up and stall at, right? We're seeing some nice signals here on the weekly chart for this trade, right? It doesn't have any indicators, but we can see it's seeing a nice move up. This is its all-time high as of right now, right? So we're trading into new highs currently, which it only takes a penny to make a new high. We've seen that this morning on the intraday charts from this symbol here. So, I'm not too concerned about that, especially when a symbol is so new, but I do want to be mindful of levels. So we're at 27 right now. We're trying to hold and break above that level overall. Our intraday timeframes are still looking good to the upside right now. But let's say $28. That's going to be a pretty strong move for the price to occur within a day. We've seen about a $2.30 range. When we look at prior wide width range that we've had, within the past month or so, we've seen here that the range was $3.68 on the 1st of April. And the day prior, it was a range of $3.47. Back the day before that, $2.88. Here it was about $3.74. So anywhere between $3 to $4 seems to be a good range for this price whenever it's seeing a volatile move, at least from what we can see recently within the past. So we've had about $2.30. That means it could make probably another dollar, maybe go up to test 28 if it really is seeing an extensive move. So I'd like to go ahead and set an alert. Let's go back to, this is it. Okay, sorry guys. I'd like to set an alert. So one way you can do that is go to Market Watch and go to alerts. Now we want to keep the symbol that we're looking at. So we'll type in NET here and you'll see it looks like an option chain, right? So I could set an alert on the actual option price. Currently right now for one of my accounts, I am in the 2250 strike at 5. Well, it's on at 5, but the mark is currently at 5.15. I got in at around $3 on that Friday. So it's already seen a nice profit, right? So let's say I have a price target in mind for the day. If it gets 100% return, which is 620, which, is actually plausible here in this case, then I want to go ahead and close it. So I clicked on the ask and you can see this pop-up box appeared. And so when the ask, or actually I should do this as a bid because I'm closing it. So we're going to change it here. So notice how I clicked on it, right? But here's where you can change it. So you can choose it by last, bid, ask, the mark, the delta. And I'm actually going to go with the mark, right? If the mark gets to around 620, that means that I have the possibility of closing it out at 100% return. Is that right? No, 640. So we'll set this at or above $6.40. That means if this option price gets to at or above right? The May 2250 call, if the mark gets at or above $6.40, it's going to send me a little notification and let me know. And then I know to go ahead and potentially take action on the trade. So we're just going to click create. And down here, you can see all the alerts that you might have out there. So here's the current price. The trigger on this alert is if the mark is at or above 640. Now let's also say I want to set an alert on the actual price, right? We told ourselves, oops, sorry guys. I have too many windows up. Let me close that one out. I'm getting it confused. There we go. So if we want to know when the price is at $28, right? Because that way we know it's seeing a move back up. It's around the $3 range that we're looking for. So if that's where we want to set an alert as another idea to say, hey, if we don't get the 640 to go ahead and fill, right? If we don't see this alert trigger first, then we'll know when we've hit around a $3 range for today, and we still might want to take a look at that and potentially close it out, or maybe do profit recycling strategy on a swing trade, right? Because this was a nice healthy move, but the squeeze still has not yet fired. So if that's the case, then I can go to the ask here, or the last. Let's just go with the last. And you can see now it's on the actual stock underlying price itself. So here I want the last if it's at or above $28, right? Because we know if it gets at, oops, that's not what I wanted. There we go. Because we know if it gets at or above $28, then there's a strong probability within that 3-point range that it could start to stall out around there, just given the history of NET. So we're going to go ahead and click create. And now you can see there's also a second alert out there for if the overall net of NET, right? See, here's the symbol here, NET. If net itself, not an option strike, but net is at or above $28. And right now it's at $27.13. So here, once again, we'll get a little alert notification. That way, if we're on other symbols, maybe we're out and about, this alert can be sent to us, and then we'll know that we might need to take action here. Yeah, so I'm not in a spread, but let's say I was, right? Let's change this from single to vertical. And then we set the 2250, 2230. So let's say this is the spread I'm in, right? Now we can see that I can once again set this from the last bid ask mark, right? We have all of these things. You can set it as a study. We're going to keep this simple for this video. So we'll just stay with the mark once again, because it's what I like to trade off of. So if the mark is at, or let's say below now, let's say we want to protect our profit on this trade. Let's say we got into this trade for $1. It's at 212. It's looking great. I don't want to set necessarily a stop loss, right? I still want to maybe take a look at my charts and go off the technicals. But I do want to know if I start to go down below $1.75, right? I still wouldn't mind a 75-cent profit, but if it's starting to drop below that, I might want to take a look at the chart and either see if it's right at support and it looks like it's going to bounce, to which case, I don't want to take action, or if it's breaking it to where it's like, okay, yeah, no, let's go ahead and close out of this and protect our profits that we have. So then I can set it to at or below $1.75. If it's always trading above it, this alert's not going to be triggered. But if it starts to move below $1.75 on the mark, right, or if it goes right to that level, it's going to trigger this alert and let me know, hey, take a look at your charts, take a look at the trade, and see if it's something you don't want to close out of, right? And I'd click create, but I'm not in this trade, in this spread, so I'm not going to add that to my account. But I'll do it for the individual, right? So let's go back to the single. Let's do it off of the mark. Once again, we'll just click on it, change this to the mark. And now I want it to be at or below. Right now it's around $5.10. That's great. For me, I'm in this at 320. So if I get back down to only $1 profit, right, I might want to consider closing it out. And then see if it retests support and maybe jump back in if there's still that squeeze there. Or maybe close out a portion of my contracts if I was in multiple contracts, right? So I'm going to set it at or below 420. That way, if 2250 goes down to that level and stalls, I can still look at the charts, see what I need to evaluate. And if it looks like things are really breaking down on the intraday, or we're really starting to pull back on the daily, I can go ahead and just close this out and protect my remaining profit. So now I have all three of those alerts set for me. They're not orders, right? So the trade is safe. It's not going to be, well, I shouldn't say safe, but it's safe from, randomly filling like you would on a stop loss order or on a trailing stop order, right? Where those are kind of set out there and then they'll immediately get sent to try and fill. These are just alerts in my account to let me know, hey, you might want to go ahead and take action, right? So now let's talk about the trade itself, right? Like I said, beautiful move to the upside. Once again, I would watch the daily charts. Here are the daily charts on NET right now. So you can see we're seeing a nice run to the upside. Still plenty of room on the hourly chart to continue higher with our lower indicator signals. The momentum still has room to the upside. Still a valid bullish signal here. The only thing I don't like about this is that we are in a Bollinger Band snap. So it's not as hard to be in one and stay in one on an intraday time frame for most symbols, but it's still something to be cautious of, right? It might mean that we're in it for 3 hours like we were back here, and then all of a sudden pull back, retest support, and then bounce. So that's another thing, I certainly want to be cautious of if I'm trying to protect a trade, or if I'm entering the trade like we're going to talk about here. Then, I want to see if we can't see maybe a pullback for a better entry level, because this is not a good entry up here. Notice also as well, you can see my alert is right here, right? So I have that set already on my chart to where if I needed to look at it, I know that it's at 28. That's where I set that one alert at, right? On the actual price itself. So it nicely pops up on the chart here too. But back to NET for an entry. So, not the best spot to open it. We know on the intraday charts here, we could pull back to $26.50, all the way down to really $26. That's where we might go down and test support to see if it bounces or not. So we need to understand that when we look at opening up a potential trade here. And so if we just go to trade, it's automatically the option chain because of how I have it linked up. But if you need it to, you just type it in, much like we did. I still wouldn't mind going out to May monthly expiration. Let's take a look at the open interest. Right, open interest is pretty decent out in May. June is 60 days. It definitely gives me more time. But there is no open interest out here, right? Everyone's trading in May right now. So I do not want to go out that far, especially when I look at how wide some of these bid and asks are. The $30 one isn't as wide, but certainly these are. So because of that, I'd probably still stick with the May expiration to try and help with that liquidity. Let's say I wanted to buy to open the $25 strike. The delta on that, where's my delta? There we go. My delta on that is right by the 0.7 delta, so that's perfect. What I typically look for. The bid and ask is only 10 cents, so narrow bid and ask, that works out great for me too. That means I can either get close to the mark or either way, even if it's at the ask, I'm only looking for about a 10-cent move till all of a sudden I'm profitable within that option strike price. So that's always the good thing about having them be so narrow like that. I want to change my contract amount. So now let's look at the actual order ticket, right? So let's say this is a trade I wanted to jump into. So it's buying a single because it's a single strike. If I needed to adjust it on a spread, you have a little bit more flexibility here. It's still going to say single. So we'll talk about that in a second. But let's say I wanted to buy one contract in this account of NET. So here we have the side, whether it's buy to sell. That's the first thing in the order ticket you would see on Thinkorswim. You have the contract amount here, right? How many contracts do you want? You can click on it individually and type it in, or you can adjust it here with the plus or minus sign, right, to the amount that you want. The symbol itself will be the next box. So you can see here NET, that's of course what we're looking at right now. The expiration is next. We're looking at the May 20th. Let's say I accidentally misclicked that. I want it to go out to June. You can also change it individually here, right? So you have that option on Thinkorswim to go down to that strike itself and change it that way. Same thing with the strike, the 25 strike. So let's say I wanted to change that to 30. I could click on it and now it's the 30. Keep in mind though, notice how the price itself didn't change because I was moving that around. So as we go down this list, make sure that if you change one of these, that you will need to change the price accordingly to where the midpoint or the mark is, or, the bid or ask, depending on what you're getting into, right? So we're going to change that back to 25. The type, it's a call that we're looking at, right? We think net overall is going to continue to the upside. It might pull back today, certainly, but the chart itself still remains bullish on a longer time frame on the daily. Then we're going to go over here to price. There's no trade that I want to link this to, so we're going to go to price here. The price overall is 360 that we have it set at right now. Net is around 345 on the mark, right? So we want to go and change that. So there, for myself, right, you can just grab and click it down here to actually change the order. You can slide the little circle here along where the bid and then the natural price is. Because this is a buy to open strike, that natural price is the ask that it's going off of. If we were selling this, you can see here that it's the natural price, but because we're selling it, it would be the bid. But there's still that midpoint. So it kind of lets you know which way you're looking at. Those flip, by the way, whenever it's the bid and ask. So on the ask side, the natural is over here because it lines up with the bid. And then the midpoint's here. When you're buying to open it or buying to close it, you'll see the midpoint on this side or the mark. And then you'll see the natural where the ask typically is. So that's how Thinkorswim set it up. You can also go up here and once again use the arrows to change it. In this case, it's giving me 10-cent strike increments to change it by. Or I can just go and type in, the price I'm looking for. So let's say this was a good till cancel order or something. I could set it higher and place it at that. Here's the order type. Just change that back for now. So here's the order type. It's a limit order, right? Typically what you have open for buying to open trades is a limit. We talked about some of these the other day, but you can set it as a market order. That means it's going to get filled instantly, usually right around the ask. There's a stop order, a stop limit, a trailing stop. Those are usually, used when you're closing out of trades and not opening them. Then you have the type of trade it is, right? Is it a day order? Is it a good till cancel order? Do I want to say, hey, I don't mind getting in at this price no matter what happens to the chart tomorrow? Or do you just want to set it as a day order saying, hey, if it fills today, great. If not, tomorrow, once again, I'll evaluate. That's typically what I like to do, right? But maybe it's a long-term butterfly that you're getting into or something. So it's more just about getting in at that price rather than minding what happens on the daily chart for it, right? If it's based more off a weekly or monthly time frame. So there's that as well. And then, of course, for the exchange, you can choose an individual one if you want. I just leave it at the best, right? Who's going to give me the best price? Just give me a fill and let me go on. Of course, here you have the confirm and send box, right? So confirm and send, I can click that. That lets me know the order description, right? So once again, just to confirm what I'm looking at, I'm buying to open the May 25 call at 340. My max loss would be $3.40 because that's the limit. This eats up $340 of my capital buying power because it's only one contract. And this account is just $1,000 account, so it'd leave me at $659.37. Do I want to go ahead and send this order? For myself, that's a little too much capital for this account that I'd want to put in. This would probably be my total risk amount for the trade in this account currently. So I would not jump into this. I might even go a strike lower if I wanted to open this here overall. Because keep in mind, like I said, this isn't the best entry point to jump in at. If we were back down here, if this was Friday, absolutely in this account, I wouldn't mind around that $3 cost basis, right? And just put it in like that. But in this case, we're trading up here. And we know that pullback's probable. So if it pulls back, I want to be able to cost average or maybe jump into a new strike. So if, your risk tolerance is similar, for myself, I'd be looking at the 30 strike instead. Now it's out of the money. So I do have to be careful with that. Theta decay does not have as good of a delta, certainly, but there's still open interest. Right, so there's still some of that liquidity, and it's only $1.30. So if it did move down to support, I could easily cost average it, or more than likely what I would do is maybe cost average it once and then buy to open a strike that's closer to at the money, or maybe even go out, right? If I'm buying this far out, maybe I go out to June and try and get in here, because this is a narrow bid and ask. There's no open interest, so I'd have to be careful about that. But here's a narrow bid and ask, gives me more time for a move back up overall, certainly. And it's still below what would be my risk tolerance here, to where I could cost average in or maybe jump in up here, but have that flexibility. So that was the example of NET. Really quickly, on tastyworks, if you're doing an order ticket, right? So as I mentioned, I'm already in this trade in this account. So let's say I was closing it out. So I could click on the bid itself on the option chain, and it will put up an order. I could also, set a closing order from the positions page itself. But either way, here on tastyworks, just to have an understanding of how this platform sets it up, it's kind of nice. You can see here that you have the quantity, right? You can click in this box itself to change that accordingly. So let's say I was selling 10 contracts. I could change that to 10. I'm only in one contract in this account, so I'll change it back to 1. You can also change the quantity here, right? With the actual arrows to move back and forth. So you have that option. Here is the May expiration. Now, in the case of you wanting to change this, you do have to go, and click on the strike accordingly, right? So you'd have to delete and go to the right expiration. But here's how you can check whether or not that's the expiration you're looking for. Here's the days out and that expiration. So this is just a reminder, okay, this is 25 days out. I still have a lot of time on this trade. This is the strike number itself, 2250. So it matches up there, as you can see. And it is the call, right? And here is a great way to know whether or not you're opening or closing a strike, right? This says sell to close. So it's letting me know, yes, I'm closing out of this trade, right? That's what it is. If I had accidentally misclicked, and notice how on the option chain itself, you can just click and hold and adjust the strike like that. But let's say I misclicked on the order and I'm looking at this and confirming everything, and all of a sudden it says sell to open up. That lets me know that's not the strike I'm in because I'm trying to close out of this. Let me go back and adjust it. Oh, yes, I need to be in the 2250. That's my strike. And it switches back to sell to close. Here, it gives you the full range of what the bid and ask is already. I kind of like that about tastyworks, where it still gives you the same thing that you would see up here in the option chain. And the midpoint, or the mark, is right in the middle. Like, I personally would like it to be on the option chain as well. So you can see here, it gives you that nice range to where you can play off of it. Now, once again, much like Thinkorswim, I can click on the actual line here to change the price. The easier thing for me is to click on these arrows, right? In this case, they go by 5-cent increments, but here I can change it, or I can just click in the box itself and change the price accordingly. Let's say I want to close it at 537. That's where I could set the order to. Here, up here, if I wanted to change the strikes, right? I also have these arrows up at the top. So keep that in mind. Same with the width. If I was looking at a spread, if I need to narrow the spread or widen it, I could do it here individually. I could also just drag the strikes on the option chain, so I have that flexibility. Here's how you can change the expiration. So if I didn't want to actually go and delete it, right, and wanted to go out to the next expiration, I could add more time. If I need to go back to May monthly, I could take away more time. Let's say I'm in this the wrong way, right? I wanted to actually buy to open this. I thought that's what that did. Maybe it's because it's a closing order. And then, of course, you can undo, redo it, clear the entire order ticket. Now it's gone. And then review and send. Similar situation. If you click review and send, it will bring up your pop-up box, let you review everything like you kind of have here, and click to close it. And then, of course, here's the max profit and loss potential, right? So I'm in this at 320. So if I close out at 520, that's a $200 profit for my account that I'm taking. So that's how it's set up on tastyworks. Is there any questions about setting alerts on Thinkorswim, or the closing order tickets on tastyworks or Thinkorswim? Oh, Lee, that's good to know. Lee mentions that he's had issues on the price, set the price, but it defaulted to the ask. I found I have to hit tab key to be sure the price I put sticks in. And yeah, Lee, I've had that happen too. So that's a good thing to note. I didn't even think about that in Thinkorswim. But yes, it is good to just make sure and review that the price that you're trying to put it at is the one that actually sticks rather than it all of a sudden just readjusting itself sometimes on its own. And I think that's happened to me in tastyworks too. So I shouldn't say it's just Thinkorswim, but just double check. And that's why you have the confirm and send page, right? This way you can double check to make sure, okay, yes, that is the price I wanted to start out at, right? Maybe I'm still working the order, but I want to start here. And that way I know I can put it out there accordingly. Good point. Taz, yeah, that's good to know too. Also, when you buy a spread, it's good to check the sell spread price to see where you're really at with your price. Yeah, making sure the bid and ask is also important, right? Knowing how far or narrow it is. That's kind of what we walked through on NET there. Because the June monthly expirations, other than that 30 strike, I mean, those are pretty wide bid and asks. So those can easily adjust themselves too. Like, especially if there's no open interest. If I were, for example, to go back here to NET and say, yeah, I want the 25 strike and I want it at 430, which is the middle of this dollar width spread, I would not be surprised, right, if all of a sudden the bid jumped up to 430 and the market makers make me work the order, because there's nobody out there. So they're going to try and get me filled as close to the ask, if not at the ask, as possible whenever you see such a wide width spread typically. When it's more narrow, or there's a lot more open interest, which also is usually another reason to see a bit more narrow of a spread, then it's a bit easier to get filled at that midpoint, right? And you can see here, just jumped up in price some. Well, the price also jumped up, so that's probably helped it. But if somebody was trying to work the order, would make complete sense to see it. And vice versa, if I was closing this out and there was no open interest and it was just me, and I tried to put this at the mark here, they are going to adjust that ask down to probably my price and force me to work it down closer to the bid. Now, I would still start at the mark, right? I'd still start at that midpoint. But because sometimes you'll still get filled there, or maybe even a favorable fill. But most of the time when you are the only one out there trading it and you have a wider bid and ask, that's what you're going to see. And open interest and volume, yeah, those to me are in the same book. So open interest is how many shares are currently out there in general, right, that people are holding. Volume is how many are opened and closed, right, how many are actually traded within that time. So that's interesting that it shows no it showed no open interest, but you can see here there have been actually some volume on the June monthly expirations, right, which makes sense why, for example, the 30 strike has a little bit more narrow bid and ask, or even here, right? Even the 25 strike has a bit more narrow of a bid and ask. The 22.50 all of a sudden jumps up to a $2 width spread, right, or $1.80. So yeah, volume is also important. I typically look at open interest because when usually there's a lot of contracts, it usually means that the volume isn't too bad either, right? So notice how there's a lot of open interest on these strikes. Notice where the volume's at. That means there's a lot of liquidity in here to take advantage of. So I think that's it. I got to prepare a few things before the main room, guys. So thank you so much for joining me. As always, I hope you guys have a great rest of your trading day. May the trade be with you. I hope to talk to y'all in the main room. Otherwise, I will talk to y'all next time. All right. Bye.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me over.